Hey Richmond, Virginia, are you curious to know what's going on in the housing market? We'll cover that today on your September housing market update. What is going on, party people? Thank you guys for tuning in. Absolutely look forward to giving you this information. If you would, a little bit of house cleaning before we start. If you would, like, subscribe, hit the bell so that you get notifications when we drop new videos almost multiple times a week at this point. And make sure you stay to the end of this video. I'm gonna give you my 3 tips, whether you're buying or selling, on how to navigate this market. Let's jump right into mortgage rates first and foremost. So 2022 has definitely been the year of mortgage rate volatility. We saw rates jump up from the 3s all the way up to the 5s, kind of peaks at the 6s. But really what we've seen in the last couple of months, we've just seen the rates being volatile, just jumping all around, which is definitely taking a lot of confidence out of the market, especially from buyers that really don't know, hey, when I get a property under contract and I go to actually lock in my rate, where's my rate gonna be? The good news is that experts predict that we're gonna see more stabilization around interest rates as we go into the remainder of this year and even into next year. We've actually seen some stabilization in the last couple of weeks, where rates are kind of just settling down in the 5s. Experts predict we could get to the low to mid 5s. Some experts are even predicting that we might get to the high 4s. So good news out there for buyers that are just looking to get into home ownership and want to know kind of where they stand as far as their mortgage rates. Next up is home prices. So everybody's asking, is the real estate market crashing? Are prices coming down? And what I've been telling people is that we are seeing where the market is softening. We're definitely not seeing where the market is correcting. It's more of a stabilization than anything. So if you look at the numbers, we will see that home price appreciation year over year is definitely slowing, but we are certainly nowhere near a depreciation or where, in layman's terms, where home values are actually going down. So home values are still continuing to go up. They're just going up at a slower rate than what we've seen. And if we look at 6 of the top real estate forecasters, they have actually raised their projections as far as how much home price appreciation that we're gonna see in 2022. So if we average the 6 of them, they're looking at 11.3% appreciation. I can tell you in Metro Richmond, we've actually already seen 10.1% appreciation from where we started at January of this year. And obviously the majority of that appreciation has already happened. So it is interesting to see where we will end up for the remaining 4 months of this year. Now, before you freak out, you might have noticed on my last graphic that we saw a little bit of a decline in home values this last month. We actually saw a 4% decline in the median sales price in Metro Richmond going from July to August. So yes, we have seen where prices have come down on a month-to-month basis a little bit since July. But the other thing to note is if we look over the last, I think in this graphic, we either have the last 3 to 5 years, you'll notice that is somewhat of a seasonal cycle that we see in Metro Richmond. We typically will see where the median sales price will peak in, say anywhere between April and July. And then typically from August through the remainder of the year, we will see where the home price is typically, median home price will come down. So just know that is not, this is not the beginning of a crash or anything like that. This is a typical cycle that we tend to see in Metro Richmond. And if you'll see in the purple line, prices have appreciated and continue to appreciate over the last couple of years. They just don't do it in a clean, linear fashion. Much like a stock market, it's volatile, but at the end of the day, we are trending upward and we have been for the last couple of years. Last but not least, let's talk about affordability. So very interesting stat. According to the National Association of Realtors Home Affordability Index, home affordability is actually at the lowest point it has been since 1990, which has a lot of people concerned, and rightfully so. But let's break that down a little bit. Let's get away from just the headline and give some context to that. So if we look at this graphic, what the Home Affordability Index basically looks at is they say, hey, based on a median home price, based on the average mortgage rates that we're seeing right now, and based on the median wages that we're seeing in the United States, what can somebody afford? So currently we're at 98.5% on the, or 98.5 on the Home Affordability Index. So all that really means is given current home prices, mortgage rates, and wages, the average family making the average wage can afford 98.5% of the average home. So certainly it's never fun to think about that home affordability is not at an all-time high. and we have dipped below that 100% number, but just realize that we're certainly not at a catastrophic level or an apocalyptic level by any means. We are slightly below that 100% mark, and obviously we would love to see that adjust, but it is something to go ahead and report to you guys. And we also are seeing where buyers, the average mortgage payment has risen significantly over the last couple of years. So we started a couple of years ago at about $1,300. We're now closer to $1,900. So we are seeing where buyers' average mortgage payments are definitely a lot higher than they used to be just a couple of years ago. All right, so what does this all mean for you? So 3 tips for sellers. You may not be able to sell for what your neighbor did. So this is a conversation I'm having to have day in, day out, which is not necessarily a fun conversation to have, but if you are pricing out your home right now, what you're gonna see, if you're looking at comps over the last 3 to 6 months, you're gonna see sales that maybe closed out in the last month or two. What we've got to realize that those are contracts that were entered into 3-4 months ago when the market was much different. So realize you may not be able to achieve the same result that your neighbor did just a few months ago, but that's because we were in a different interest rate environment, we were in a different consumer confidence environment. You're still in a very good spot as far as comparing yourself to just a year ago or 2 years ago, certainly, but realize you may not be able to create that same result. Secondly, presentation matters again, and what we mean by that is the presentation of your home. The presentation always mattered, but it definitely might be the difference between you actually selling and not selling in today's market, whereas before it was just the difference between are you just going to sell, or are you going to achieve the maximum price you could sell. So things like staging your home, getting it ready, professional photos, professional video tours, social media marketing, all those things absolutely matter again. And last but not least, goes without saying, pricing matters again as well. So we used to be in an environment where it really didn't matter what your price was. It was just kind of the starting point of a negotiation. And we knew we were going to get multiple offers on every property. We knew, most properties are going to get bid 5 to 10% over their asking price. We are certainly not in that environment anymore. So getting the pricing right from the get-go is absolutely crucial, because if you don't, it's not a guarantee anymore that you're going to get offers. And if you overprice yourself and your home ends up sitting, you're going to end up ultimately walking away with less money typically, because the worst enemy of any home listing is time on the market. And that's something you want to avoid by overpricing your home. For buyers, so we talked about it, home affordability is certainly not where it used to be. Home prices have escalated a good bit, and we're also seeing rising interest rates, which means it's more expensive to go buy a home now than it was just a year ago. So if you are somebody that is not necessarily finding what you want to in your price range, you might want to consider expanding your search. So looking in areas maybe a little bit farther out than where you originally thought you wanted, where you originally thought you wanted to be, maybe searching in alternative areas that you hadn't considered. Just kind of expanding that search. You might be surprised to find that you might find something that you like. You might realize that, hey, the difference between a 20-minute commute and a 30-minute commute is not all that much a difference if it means I can actually get the home that I want. Secondly, explore alternative financing options. So you definitely want to make sure in this environment that you're talking to a good mortgage broker that can show you all of the mortgage products that are available to you. Kind of play with the numbers, say if I were to put down less, kind of what does my payment look like? What are my different financing options? Definitely make sure you're working with a good mortgage broker. And then last but not least, downpaymentresource.com. This is a great resource where you can see what down payment programs are available to you, if you qualify for any grant fund money, and really just see if there's any money out there that you could scoop up to assist in your home buying process. So I hope all that made sense. I hope you found value in it. If you did, make sure to like and subscribe so you get our next video. If you have any questions, concerns that I didn't cover, go ahead and throw it in the comments. Thank you guys for tuning in. Look forward to seeing you next month.